Okay, so if we look at our next set of ratios, so your gearing and your interest cover, all right? So again, what's happening here? These two ratios are talking about any debt financing we have and the interest that's going to be paid on the loan or a debenture, okay? So with your gearing ratio, when we talk about debt capital, if we were to look at our question itself, okay? So just going back to the question sheet, debt capital, that's any capital we have that we basically have a percentage on, okay? Because you're trying to think, how am I going to make my life easier on the day? So your 7% debentures, so they're debt capital, all right, because there's a payment made on them, 7%. And then you have the 6% preference share. Anything that has a set payment that's going to be paid out, all right, that is our debt. So 500,000, 150,000, all over your total capital. So if we look at the formula again, so it's going to be all over the total capital that we have in the business. So if that is more than 50%, we say it's highly geared. All right, so we're just keeping an eye on that. Then your interest cover. So you're saying to yourself, how many times would I actually be able to cover my interest payments this year? So it's your net profit before interest, so net profit plus the interest. So before the interest was deducted, how much did I have? How many times was I going to be able to cover my interest payment? So again, just where are we taking these from the question? So your net profit plus the interest. So you'd add back on that 35,000 to that interest payment and you'd have it then. Okay.